I've closed many a Zoom meeting accidentally by that. Being better colored buttons. GM, welcome to Wednesday, ladies and gentlemen of the internets. Welcome to the Beacon Roundtable. We are live with our tribe here at the Beacon Lighthouse. Ready to talk to you about the news of the day in the crypto universe, on-chain, and decentralized finance. Gentlemen, we're 2 weeks removed from Miami. It's kind of weird to not be in the same room.
Yeah, that was a good call. It was some issues with the audio, but it was nice to be able to host it from the same room for once. Yeah,
we've had one in between the live call, right? We had a right,
yeah.
Surely, yeah. Yeah, I'm glad that we're no longer in the same room because I'm kind of sick now. I guess travel and a few sleepless nights in Miami will do that. But besides that, feeling good. That can't be our cold open, though. I know, Andrew, you got something for us, right? That's not the cold open.
Well, I was just gonna say I'm having empanada withdrawals for anybody who is in that area. I mean, we had empanadas practically every day. And so shouts out to Half Moon Empanadas. Shouts out to the garlic mayo sauce. My goodness.
Hey, come on, Chris. No free sponsorships. They got to pay for that.
Sorry. That's true. That's true. But just friend of the show, right? Actually, the interaction I had when I was like, I need extra garlic mayo. They're like, well, how much? I'm like, I don't know, 10? They're like, 10 garlic mayo? Like, she looked at me like big wide eyes, like, are you out of your mind? And I'm like, I was like, man,
you can't be serious.
My group, they love this sauce. If I don't come back with this sauce, there's going to be issues. So
that was a good move. That was a good move.
Yeah, like at Chick-fil-A, they don't even ask questions. They're like, how much sauce you need? You're like, I need 300 packets of Chick-fil-A sauce. They look at you dead in the eyes and say, my pleasure.
Exactly. My pleasure. Hey, we got a Twitch speaker. Valdez BTW. Welcome to the show. What's up, Valdez? It's good stuff.
All right.
Andrew.
Take us away. Sir. That's no longer the cold open, but I guess Andrew will start.
Yeah, it actually needed to be you that started, Jangle. There was a plan, and you and Chris both freaking rugged me. The plan was to run it back, and you were saying about that. What about that X thing, Grok?
It's okay. It's so tough to plan these cold opens because we jump in the stream like 2 or 5 or 10 minutes or whatever before we start, get everything set up, and we just start talking. And so it's hard to capture that magic in a bottle right at the top of the hour. But yeah, we were talking about the AI summit or the dev summit, whatever OpenAI had like the other day. And then I had heard some stuff about Elon's Grok thing. So I was like, what about that Grok? So how about that Grok, Andrew?
What's Grok, Jangle? Do you know what that's from? And no, it's not from the Hitchhiker's Guide to the Galaxy, though it was referenced in the Hitchhiker's Guide to the Galaxy.
My initial guess was it was some character from Hitchhiker's Guide to the Galaxy because Elon's a simp for that book. So
it literally says so right there.
Well, there we go. So Andrew, how am I wrong?
All right, boys. According to Wikipedia, Robert A. Heinlein, what?
This is straight from the source. On screen right now.
X is the source.
Wikipedia is wrong.
Okay, they can reference whatever they want, but the word came into existence from famed writer Robert A. Heinlein in his 1961 science fiction novel, A Stranger in a Strange Land.
That is correct.
Of many accolades and fame. And also, because I like to do this sometimes, there is a history of this word being used, I want to say, in the nerdy, geeky, open source hackery community, likely between the 70s and 90s. I'm not sure exactly where it came into play. And it just means to understand. So if I say that I grok, it means I understand the AI named Grok. Anyway, terrible cold open. We'll try better next time.
Honestly, a solid. I will say though that like what's interesting about this is, whenever you mention AI, I talked to a group of normies the other day that were teachers, teacher normies. and educators. And I was like, what do you think about AI? Because I assumed they were going to hate it, and that they were going to be incredibly, backwards, sort of like my teachers were about computers and technology when I was in grade school. And boy, was I absolutely right. They were super anti AI. They were like, it's just a tool for cheating. It's all bad. I'm like, well, do you encourage your students to learn how to use it effectively to increase their productivity? They're like, no. I'm like, man, our education system is doomed. But one of the major concerns they had outside of cheating, and using it to do work that you're supposed to do manually with your brain, was the bias of AI. And so I think that there is a cohort of people who, when you mention AI, they get concerned about, okay, who's training this model? How do they put their bias in it? Like, are we going to have a woke AI or something like that? And I think Grok might be the answer to the woke AI, because Elon has sort of aligned himself culturally with the, especially with the Twitter acquisition, adding sort of like community notes to the Biden administration's posts sometimes. Like, he's kind of aligned himself as almost like the counterculture, like anti-woke billionaire. So developing his own AI model in response to OpenAI, which has definitely faced criticism for the political leanings of their models, or at least the implementation of their models in ChatGPT, has been interesting. So as far as it relates to crypto, for me, like, it seems, really cool, especially the dev day. Seems like, anybody can build their own GPT on top of, or their own application on top of, GPT without knowing any code. That seems really cool. Seems like a lot of things are happening in this space. None of it crypto related. They also, at the Dev Summit, I think they announced over 100 million weekly users of maybe just GPT-4 specifically, or maybe it's ChatGPT as a whole. Anyway, OpenAI has over 100 million weekly users, which is like blowing the entire crypto industry out of the water by a large margin. So like, I think we'll continue to see AI's sort of like growth, and it have its time in the sun, at least from a user adoption standpoint. And I don't know if any like crypto narratives are going to be able to really meaningfully take hold of that. Like, outside of autonomous AI agents, like doing lots of tasks and using crypto and smart contracts as like money and business logic, which I think we're still a couple of years away from. Like, there's no real crypto-oriented implementations of AI that I've seen brought up in any of these talks. So like, kind of like bearish on the crypto AI narrative for the next like 12 months.
Although it's not
Maybe
necessarily, related, I do think, at least from a digital art perspective, OpenAI's copyright shield, if other AI models like Midjourney or Stable D or some of these others come up with some type of copyright shield to help shield digital artists. And again, obviously there's been a lot of flack about artists saying that art is being stolen to create a lot of the art that we're seeing as digital art or NFT, like PFP NFTs, that type of thing. So I do think that what they're building here is important from that perspective. But no, I think you're right. I think outside of that, I think we'll see more crypto-based or crypto-facing things moving forward, with some of the new things they're doing, specifically with turbocharging GPT and making it cheaper. What are you saying, Gabe?
Yeah, I do think there is a big part in, or a big role to play for AI in when it comes to analysis and like turning crypto data, like blockchain data, into legible data, and doing like on-chain tracking, on-chain analysis, like compiling large data sets and getting usable and like useful information out of it. I think that will play a large part, perhaps not in the next 12 months. It may take longer, but since all the data is available on chain and public to everyone, I feel like that's where AI is going to play the strongest part in crypto.
I think Steve's got a great point here. You can write smart contract code in Solidity, and it actually compiles. People are using GPT for secondary auditing sources on existing code as well. So this is all relevant to what's going on in Web3 for sure.
Oh man, I have so much to respond, and I'm going to try to be streamlined. Number one, I think it depends on which teacher you're talking to or which teachers you're talking to. I think the sentiment is probably normal of the teachers you spoke to, Jangle. But I was speaking to a teacher the other day that wanted to share with me this AI tool that was specifically geared towards teachers and schools. MagicSchool.ai, not a sponsor. I haven't really even looked at this tool yet. I'm assuming it's just a GPT wrapper. But there's a lot of cool tools that are essentially just API wrappers that are very industry specific. And I think that's an area of growth we're going to see around generative AI. I do agree that like crypto plus AI like, feels kind of like a meme. I feel like right now with this breed of generative AI, which is a very specific breed, and we're likely to see things that are a bit different in the future, that it's like we're probably not going to put it on chain because it's a whole lot of data. So if it's not on chain, what is it? Is it a tool for users or is it a tool for builders? And right now, what I'm seeing from AI is that it is a tool for builders more than a customer facing tool, which means that the AI component and a lot of the stuff that's being built is not necessarily something that's going to be found by the users. And therefore, if you put it in the word, it's kind of just a buzzword.
Yeah. As far as AI and crypto integrations, yeah, totally a buzzword, at least for the next like 6 months. It's hard to say what happens further out than that. But it seems like just a narrative just to catch attention to meme coins so far. So
Maybe
think
it's
you
going
use
to help us
productivity
build
as
a
well.
Clippy for MetaMask.
I think someone's already done that, but we'll see.
Foxy?
Sure.
It may help provide solutions for the issues that we're having, or that have been existing when trying to calculate taxes. It's probably a lot better at compiling that data with some training. But like Django said, probably in the next six months, we're not going to see this implemented because it'll require a lot of testing before we get to that stage. But I do think it has a place in crypto in the future.
Yeah, I agree. Before we move on, just wanted to say hello to everybody who's on the stream. Thank you for joining us, whether it's here on YouTube, on Twitch, or also on Facebook Live. Please take a minute to like and subscribe if you like what you're hearing. We're here every Wednesday at 1 p.m. Eastern. And one thing we were talking about, again, this is where we've only been here on YouTube for a short amount of time, but we are coming on our 2-year anniversary of this specific format call. Maybe we'll do something special. We'll see. Go ahead and move on to something we talked about 2 weeks ago when we were in Miami. Jangle talking about how we're in the beginning of a structural bull market. So I decided to take November and just call it NovemBULL as opposed to October or whatever.
I was about to say, not to be confused with October.
Exactly. And essentially, looking at what we have at CoinGecko, I mean, everything is up. I mean, you have Sol outperforming ETH, BTC outperforming ETH, even Kujira and Rune outperforming ETH. Disclaimer: those are some of my bags, but yeah, it's we're seeing some serious run ups over the last 10 days. Any takes that we have from this, guys? Anything that you're seeing that you think is really just contributing to this? Andrew, we'll start with you, sir.
Bearish stablecoins. I think stablecoins are down against everything, and it's really kind of sad to see. But I no longer feel like a USDC bull.
Why?
Whoa!
That's a shot across the bow.
What about the stablecoin market cap? The total stablecoin market cap? Are you bearish on that?
Haven't looked. I'm memeing, sir. I'm memeing.
Oh, he's memeing.
I mean, obviously you're memeing, but like in terms of the amount of stablecoins in the ecosystem, like total US dollars tokenized on chain, bullish or bearish? I'll share a chart. I'll link it in our chat for DeFi Llama stablecoins, so you can see the.
Looking at one chart, and it looks like it might be parabolic. I'm not sure if this is the right chart.
Definitely not parabolic. Yeah, DeFiLlama.com/stablecoins. Those are the market cap of the leading stablecoins. Let's see. Total market cap. You can hit the drop down and hit total market cap to see all of them combined. So the precipitous drop in May of 2022 was, of course, none other than your size is not size. Do Kwon's UST exploding. It kind of bottomed out in mid 2022 and has been crabbing really just absolutely sideways for almost a year and a half now. So what are we thinking? What are we thinking? Have we bottomed on the total stablecoin market cap?
Gabriel.
Yeah, I mean the interesting one was I was looking at DAI specifically. I think the gain there is likely related to the MakerDAO implementation they've been doing over the last couple of months. Like you said, I mean, there's no reaction.
The higher DAI savings rate, or what do you mean?
Yeah, exactly. Yeah. And as far as I'm aware, there's not really any other large cap stablecoin that's doing anything like that yet. Probably will be in the future. But yeah, like you said, the chart's been completely flat. There's no reaction at all as of yet. It does look like, I mean, we seem to be heading into a crypto bull market. I mean, Bitcoin's up over 100% on year to date. I would have expected to see a bigger reaction in stablecoins, but I guess mainly it's been focused at more volatile assets rather than stablecoins.
Yeah, I mean, think about it. When you look at, okay, obviously the Luna collapse, but after that, during the second half of 2022, you're still in the rising interest rate environment. By 2020, by the middle of 2023, I forget when the last interest rate hike was, but by the middle of 2023, you're by and large done with interest rate hikes. There is honestly very little reason for U.S. citizens or those with access to the federal funds rate to keep a large amount of stablecoins. Because if you're in Tether, if you're in USDC, and up until fairly recently, if you're in DAI, you're not earning the federal funds rate. You're not earning the 5% or so yield that you could be earning on your USD. And you're also, taking some custodial risk because when you are holding USDC or Tether, you are basically an unsecured creditor of Tether or Circle. So, of course, the stablecoin market cap was down only in this sort of environment. But if you see things heat up, you could see higher native yields for stablecoins on chain. The DAI savings rate brought the federal funds rate for the most part on chain. There's still more risk than just holding T-bills issued directly from the government whenever you hold DAI. So there's still not a really good reason for US-based capital or capital with access to buy government debt directly to come on chain in droves. So I think that's why we've seen this suppression of the overall stablecoin market cap is because and then a bottoming out process is because really all of the capital that could leave and get the federal funds rate, get T-bill yield did. Right. And so a lot of the capital that's left is very DeFi native capital, is maybe overseas and doesn't have access to T-bills directly. And so it stayed. I think that's why you've also seen a drastic rise in Tether dominance since the, since the rate hiking cycle really kicked up over the last 2 years or so. And that's because Tether is viewed as sort of the offshore stablecoin, right? Whereas USD is the onshore stablecoin, kind of. So most of the onshore dollars went off chain to get that yield in a money market fund or in short-term T-bills directly, whereas the offshore capital didn't have access to that, so it just stayed in Tether, right? And then use some on-chain strategies to maybe take a little bit more risk to get yield, or just sat in Tether earning no yield. So, I think in a lowering rate environment, you see USDC dominance catch back up a little bit, but USDC is also in a situation where it can't really offer a native yield like something like the DAI savings rate because of securities laws and regulations in the United States where Circle is based. So it's really going to be hard for USD to compete in that regard in terms of like a native yield. You see SDAI, SFRAX leading the charge there, but like still, overall, it's not really moving the needle. You can see Tether up and most everything else down on the 30-day in terms of capital inflows. Besides First Digital USD, which I think is like a Korean-based stablecoin, MKUSD.
Prisma.
That's Prisma. Yeah, that's Prisma.
Yeah,
I
was actually going to talk about that, and I wanted to ask you about that mainly because, obviously there's no B in front of any of these over collateralized stablecoins, but it could be we're coming to a point where there could be. Liquidity, of course, has been around for quite some time, which you mint based on BTC, ETH, or whatever assets they have. MKUSD from Prisma, which was recently launched, thanks to help from CRV, and then we have Curve USD, and then EUSD, which comes from Libra.
I think another interesting thing to note here, and I think this reinforces Django's thesis that there's a lot of capital in crypto that's hungry for getting those treasury yields. If you look at Maker USD, MKUSD, it's up 509% on the 1 month, and it's actually just blew straight past PayPal USD. Which we talked about before. We're not really that interested in PayPal USD, but looking at Maker specifically and seeing the really massive growth it's had over the last month is very interesting.
Yeah, MKUSD has exploded. A lot of that, I think, due to the Prisma token inflation and like massive yields, as well as like support from Curve. I to be honest, did not realize how insane that the amount of capital inflow into that has been. I knew it was significant, but the fact that it's already surpassed CRV USD and is like really biting at the heels of something like LUSD within this short amount of time is like stunning. The Prisma token, how is that holding up in considering all the inflation? I assume down only. Yeah, pretty down only, as it is kind of like a farm and dump token currently. But yeah, we'll see. I know that there's a lot of Curve OGs that are like angels and like insiders to this that have allocation. So I'm sure that it's being shielded on the timeline and stuff. So
it's probably what's keeping it alive, to be quite honest.
Well, hardly. I mean, look at that chart. But the fully diluted value of 257 million, that's still pretty large. Like, I think it has a good ways to fall. But I'm not sure what the tokenomics really are outside of, I know some Curve OGs have some insider allocations and people are farming the absolute pants off this thing. So when this, bottoms out to $100 million fully diluted value, does it get to a $50 million fully diluted value? Does that reduction in price, therefore reduction in yields that they can, APRs they can generate, cause capital outflow from this? Perhaps. I'm not touching this right now, right? If you're going to farm it, careful with any exposure. I haven't really done a whole lot of due diligence, so like maybe there's definitely people who know more than me about this sort of thing. I had not realized how fast this thing absolutely ripped. So
it's almost like a base-like move.
Yeah, another thing that I've been noticed just as a general concept in crypto, I've been looking more at volumes, and we're not really seeing large volumes in terms of trading. Like even looking at Bitcoin, if you compare the volume it's at right now compared to anything previous to 2021, it's nowhere near. Even going back to like earlier years, like 2016, 2017, we saw much higher trading volume than we do right now. And that is an interesting thing to look at. Do you have any thoughts on that, Django?
Yeah. Volume's low. Compared to the bull market. I'm also just looking at PayPal USD right now because it's at like $114 million market cap, which is pretty crazy. Like, who's holding this? And like, why is it like PayPal that's like settling things on their back end with this? Do you guys like know anybody who's farming this? I'm looking at like pools with PYUSD, and the only pools that I can really see are like Uniswap V3 pools with USDC and Tether that have like 1 million ish, or maybe 1.4 for USDC in TVL. So that accounts for a couple million. But like there's still like over 100 million of PayPal USD just floating around. Excuse me, just floating around. Yeah. So yeah, no clue who's holding this and why.
I could make a guess that it may be people who are buying and selling crypto on PayPal itself, and there's likely a lower fee associated with trading into PayPal USD than converting it to straight to USD. And it's probably for people that are going in and out of crypto and trying to get lower fees.
Almost like an off-ramp or arbitrage type deal.
Yeah, right now on mainnet you can earn some decent yields. Let me check on Convex, but there's a curve pool for Curve USD, PayPal USD, and there's a curve pool for what is it? Frax BP, PayPal USD, and I'm gonna see if either of them are on Convex, but they're both. Yeah, they're both on Convex. So you can earn. Oh, the Curve USD one's kind of dead. There's like less than 1 million in TVL. You can earn like 1.45% on PYUSD paired with Frax BP on Convex on mainnet. So it's like, interesting.
No bribes at the moment.
Is there any way you can trade into PYUSD on chain? Like, is there on chain liquidity for it?
Yeah, that's what I'm saying right now. Is that there's a curve pool for PayPal USD and Frax Space Pool.
That's probably really the only spot to do it. I don't think there's a.
There might be something. There's Uniswap V3 pools with liquidity. Have I been muted for the last 5 minutes? Like it's, yeah, it's like there's a PayPal USDC pool, and there's a PayPal USDT pool. Both have like roughly 1 million in liquidity. There's a Curve USD PayPal pool, and there's a Curve, or there's a Frax Space pool with PayPal USD. But still, there's like over 100 outside of those liquidity pools. There's still over $100 million of PayPal USD that's not in any of those pools that I assume is being held like spot, because I don't know of any lending markets where you can borrow against PayPal USD. So like, where's this $100 million of PYUSD coming from? Like, who's holding it and why?
Could be PayPal themselves.
Yeah, it could be PayPal themselves or PayPal users, or they use it as settlement on the back end or something. Like, I don't know.
Do you think they're taking their time because of the regulatory environment? They don't want to do anything that might cause a lot of headwinds coming their way, I guess.
I don't know. From what I understand, PYUSD holders actually have a better legal standing for claims on their funds versus regular PayPal users. Because I think regular PayPal users are somewhat unsecured creditors like USDC holders. So I think that PYUSD, like, there are actually stronger legal assurances in the event of a PayPal bankruptcy for PYUSD holders than there are for like USDC holders in the event of a, Circle bankruptcy. But either way, Circle's business model is like very conservative, so I'm not really worried about a Circle bankruptcy. But like, still, if you got $100 million and that you're just sitting in, you care about the the long tail risk. And so maybe that's why PayPal USD has a decent amount of capital inflow. It's just whales who want to not be exposed to bankruptcy risk. And so they'd rather hold PYUSD than like USDC.
Cool. Well, we'll move on to the next subject. I did want to start with a PSA. And that PSA is regarding quote unquote App Store apps, specifically for Web3 activities. There was a fake Ledger Live app on the official Microsoft App Store, caused nearly more than $500,000 to get stolen because people were using it to put in BTC. Have had many friends fall for things like this, specifically on mobile, which is why we don't advocate to use mobile in DeFi. Too many bad actor apps out there. Microsoft was quick to remove this. I mean, we also had a fake MetaMask app or something like that as well on the iOS App Store that happened earlier this year. So, just as a PSA, do your due diligence. Always get your apps, if you use an app, for an actual protocol from the source. Always, we always say don't trust, verify. These are things that you need to verify to make sure that you're not losing your funds. And we are huge on max protection of wealth here at Beacon. So, any thoughts on this, guys, before we move on? And hat tip to Zach XBT always for being on top of this kind of stuff.
I have a lot of thoughts, but I've been trying to do research and it's really hard to do it live. But I'm really curious about the correlation between stablecoin market cap and the stablecoin market cap ebbing and flowing compared to where we are in the market cycle, with also wondering about how it could be different right now. Because if we have if we have buying of major cryptocurrencies not being led on chain, it happening on chain is not, and there being a market cap of stablecoins because they're needed on chain, maybe that may be a specific segment of the cycle where that happens. So I'm kind of curious about potential historical indicators of the interaction of, or excuse me, how those different behaviors line up next to each other. But it's probably going to take me a few hours to actually find some usable data and format it in a way that's visually appealing.
Yeah, and I mean, it's just hard to compare stablecoin market cap cycle to cycle because so much has changed in DeFi and actual crypto stablecoin adoption cycle to cycle. So the fundamentals have just drastically changed so much. But
there might be other things other than just the raw number of the amount of the market cap or the percentage of the total market cap that is in stablecoins. There may be some other things that can be found, and that's why I think it would take a long time to find if there's actually anything usable.
Yeah, I mean, this is also the first bear market, even though it's we're technically in a bull market now. This is the first down part of the cycle where there's actually a positive real rate environment. So that I think also just sucks a lot of capital off chain because of the opportunity cost associated with holding your fiat on chain, unless you take a little bit of smart contract risk with something like the DAI savings rate, which is just not necessary for a lot of capital allocators to do. So they opt to take the direct route to the federal funds rate.
I think then the question is, can you sort of adjust for that by looking how that's impacted the stock market or other markets? Because something similar should be happening theoretically in other markets, but maybe not, and maybe, and yes, assumptions would have to be made.
Yeah, we have kind of seen that play out to some degree. TradFi has been on a big rally, especially the Nasdaq and tech-related companies, specifically related to AI. And there's also been a lot of really, really large corporate deals where big companies are being bought up. So there is a trend that seems to be happening where larger corporations with big cash reserves don't really want to be holding that cash in the company. So either they could get to 5% or they can invest it in buying other companies. Like I think Microsoft bought Activision Blizzard for $66 billion or something. And there's a couple of these really large multi-$10 billion deals happening. I think Ford also had a buyout, or they bought another company recently for similar prices.
Yeah. As far as the whole fake Ledger Live app thing, don't it also really helps to understand exactly how it sounds like a scary jargony phrase, right? But public private key cryptography actually works. So it's not honestly that complicated of a topic, and it's like the whole fundamentals for the security of all of your crypto. So like if you're in crypto and you're spending time on like figuring out the next 10x gem and you like don't know the fundamentals of how public private key cryptography works, like you're messing up, dude. So like go to go to YouTube, or I've got trainings on it on our circle group Beat the Banks, and like wallet separation 101. But really, like if you just understand what is public private key cryptography, you'll understand like, okay, I've got a private key, it maps to a bunch of public keys, like I should keep my private key secret, that's why it's called a private key. And like I'm never going to authenticate to Ledger Live by sending some Bitcoin address my Bitcoin, right? Or sending crypto to some other crypto address. That just like makes no logical sense. So like even if you download a malicious app and it pretends to be Ledger, and it's like, hey, authenticate to Ledger Live by sending all of your Bitcoin to this address, like it should spark something in your brain. It's like, wait, that's not how I should authenticate. Like I should authenticate by signing some transaction or by what, and then I'm going to understand what the contents of that transaction are. And if the contents of that transaction are sending all of my Bitcoin to another address, then like it should set up some red flags should be raised. So yeah, like be careful which apps you download for sure. But also like if you download a malicious app and it's pretending to be Ledger Live and it's like, hey, log into Ledger Live by sending me all your Bitcoin, like that should probably raise some red flags.
Agreed. We'll float over to something else before we get back to NovemBULL, and it's probably something that if you didn't hear about it last week, obviously big news. Not a shock to anybody, I'm sure, but Sam Bankman-Fried was found guilty on all charges. This will be the last time we talk about this case until possibly when he gets sentencing in next year, in March, I believe is what it is. But
Very
the backlash
likely,
is
but yeah.
I mean, the backlash has been swift. There's been tons of people in full support of this. Time for the man to go to jail and pay for the issues that they have. Interestingly enough, a lot of movement from FTX estate accounts, possibly to CEXs to start selling, which will be interesting if we start seeing some big movement there. Takes anybody?
Aren't they authorized like 200 million a day or something like that in selling?
Something like that. But they are loading up to start selling possibly some Solana with it regaining what it's regained. So
yeah, I had something that was maybe it was on your screen, but I did see a chart somewhere of all of the assets they have and what they're authorized to sell. It's quite a bit. I think it has been going on already for a period of time. So yeah, like the market strength in the face of lots of bankruptcy courts selling, and I don't think it's just FTX, right? It's also like Voyager and BlockFi and like Celsius that have been kind of like looming over our head for a period of time. Is
right.
pretty bullish in my eyes, like the relative performance of the market considering like the incremental sell pressure. And yeah, it's pretty, get them out of here. Let's it's time for the next crop of charlatans in the bull market that began 12 months ago.
Imagine being a forced seller right now. Rip.
Yeah, no, it's painful. Yeah, no, it's very unfortunate. It's why you don't want to leave your assets on a centralized exchange that could go to bankruptcy and then dump your bags at the worst possible time.
Yeah, it's one of those things that we'll just. I think a lot of it's honestly priced in. I think there's a lot of people interested in getting back into things, especially with BTC claiming its levels and just outperformance by a number of different protocols that are out there that are starting to build. One of those, little segue, is to Arbitrum. If you follow the official Arbitrum account, I mean they are buzzing with all kinds of things, all kinds of Twitter Spaces, all kinds of things that are out there. A lot of it is based off of the transfer of the STIP funds, the short-term incentive protocol that they did with 29 different protocols on the ARB blockchain. Got a little something. GMX being the biggest. They got 12 million that they're going to be putting out with V2 pools. I think it's for over the next 5 months, I believe. Here's a document. We'll have this in the show notes exactly of what those things are going to be, specifically for both traders and for both GM liquidity providers. So, yeah, it's a lot of big tokens here. Also doing some grants. Look, apparently, I didn't realize there's going to be some grants as well. So, yeah, interesting document here. Let's see. They already have their week 1 liquidity incentives. Interesting to see where these go. These are GM, meaning the GMX version 2 pools for that.
Yeah, I think those are in effect now. So like the APRs are kind of juiced. Pretty sweet.
Yeah, we're going to see a lot more protocols coming out with some things we talked about in our newsletter this week. We have Radiant having a thing with their DLP lockers. You can relock as long as you as your 6 to 12 month locker. You can be in for the next thing of ARB. Gamma Strategies has their pools out. Trader Joe has quite a few pools out on Trader Joe and Arbitrum. A lot of interesting ones there, and Stella is also a big one that I'm personally in. So, yeah, there's a lot of things that are out there. We're going to see more and more over the next couple of weeks as some of these governance processes come through with how they're going to be spending their particular incentives that they received. Guys, any particular protocols in particular that you have your eye on specifically that people should consider looking into right now?
I got one. Want me to go first?
Go ahead.
I still like Radiant.
Oh, come on. Yeah, I mean, I agree. Radiant's cool. But let's get some new stuff in here. F of X protocol. I'll link it in their Twitter, in our chat, and here in the YouTube chat. F of X protocol is basically a protocol by Aladdin DAO that allows funding rate free leverage on ETH, long only, the way we like it. It does this by also creating a on-chain native low volatility coin, not necessarily a stable coin pegged to the dollar, but it's like only 5 to 10% of the amount of volatility of ETH in either direction their stable coin will experience. So basically, the holders of the stable coin are giving their volatility on ETH to the holders of the leveraged, I believe it's called XETH. Yeah. So the FETH is the stable coin, XETH is the leverage position. The amount of leverage on XETH depends on the amount of holders of FETH. And the holders of FETH, which is the stable coin, are giving their volatility to the holders of XETH. So they will get leverage exposure to ETH, and they are long. So, and it's no funding fee for the leverage. It's I believe fee free for both sides. They're on mainnet. They've been growing pretty steadily on mainnet, and they are, I believe, deploying to Arbitrum pretty soon if they haven't already. So they're going to gauge the and they're using Layer Zero's OFT model in order to get their token multi-chain. So that's pretty cool. Love Aladdin DAO. I was a booster for Concentrator, and the Aladdin DAO is essentially the incubator for Concentrator, this protocol, and Clever, and so some big brain DeFi guys over there, and gals as well. So yeah.
Are you planning to deploy in that when they launch an Arbitrum?
I guess it depends on the price of ETH. I have really no interest in holding a low volatility coin, but maybe on their levered ETH thing. If ETH pulls back a little bit, then sure, I'll buy some XETH on Arbitrum. Don't feel like holding anything on mainnet, with gas fees, unless I'm going to deploy some serious size in it. But yeah, I'll wait for it to get a little bit more Lindy. Maybe wait for a pullback. I've already got plenty of ETH. So it's not really like a concern for me. But yeah, if there's a little pullback on ETH and their product is gaining traction on Arbitrum and it's been live for a little while, I'll put a little bit into XETH. I think it's just a really cool product.
Come on. You know, it's that time, right, where you gotta put some risk back into the system, right? You gotta levering up a bit, right?
I mean, I do. I'm bullish on a a 12-month time horizon. No clue what's going to happen in the next month or 3 months, and we have just had like a massive rally over the last month. So I
Perfect time to do a 10x long, right?
I mean, maybe we'll. I'll let you know in a few weeks. All right, now you guys have to go. Let's come on. I know you guys have bangers. Give me a banger. You don't have a banger DeFi protocol.
This is hot protocols, right?
Yeah, dude.
Hot Arbitrum protocols?
Yeah. Oh, it doesn't have to be on Arbitrum, I don't think, unless it does, Chris.
I have been. I've been. I know I've mentioned this a couple of times already. Stellar has been gaining a lot of traction. At least the TVL has been growing very quickly. I think it's up over 4 million now. Still not very big in terms of like what you would consider a Lindy protocol. It's 4.4 now. Yeah, so it's been growing very quickly over the last week. I think it's gone from just over 2 million, so it's almost doubled in the last week and a half, and it seems to be growing pretty quickly. Yeah, I'm looking at setting some new positions on Stella. Some of the ones I had have timed out because they are limited to 30 days, most of them.
You beat me to it, Gabe. But what's not to like about 36% on liquid staked ETH, or 15% on regular ETH, or 1200% on Pendle ETH? What's not to love?
I agree. I will tell you all right now. I am in this ARB position. This 0.3 ARB position. That's a Uniswap V3 leverage or type of things, making extra leveraged ARB on the back end after 14 days of linear growth. Once I close the position, it's paying out pretty well. Obviously, ARB outperforming ETH. It depends on how you make the position because you can short either asset. I'm actually longing ARB in this case. So yeah, pretty decent yields here. Mine is actually in a pseudo delta neutral position, by the way, for anybody who's curious about that strategy. Feel free to check it out. I think I'm currently, based on the leverage I'm taking, is roughly about 300 something. But yeah, there are some things here. This is utilizing Trader Joe again, extra ARB incentives on these pools. That's why these APRs are so high. It's limited time though. I think the epoch for these Trader Joe pools is, I think, November 17th. So if you're gonna pop in with some size, you're gonna have to do it quickly and get out. Extra thoughts on that, Andrew? Gabe?
Something to keep in mind with these leverage positions is that it's a closed lending market. So if you're trying to short or long or leverage anything, you need to make sure that there is actually a market for you to borrow from. And something interesting kind of right now is, there's $500,000 in ETH available to borrow. There's at least 300K in USDC available to borrow. But as you get down through the altcoins, there's going to be a lot less. Like right now, there's about $9,000 in ARB available to borrow. So entering some of those altcoin positions with size is going to be limited by there actually being a market for it. But the other side to this, which is cool, is if you happen to be, I don't know, like an HMX holder, you can get 18%. If you're trying to get some yield on stable coins, you can single-sided get yield on USDC at almost 11% right now. So this is kind of like not the platform, I think, for someone that is super risk averse or doesn't have like time to check in on things, because some of these yields are going to be fast moving. But if you want to feel the vibes of this bull market, if you want to feel the energy coming back to DeFi and just the vibes flowing through you, read the docs and check out Stella and You might have as much fun as I do.
Love it. Stella is from the old Alpha Homora team, so it's a bit of a rebrand. They've been around a long time. So yeah.
I think it's worth mentioning here as well. I don't think we mentioned it last week. I don't know if it had launched on ETH mainnet yet, but Radiant did launch on ETH mainnet over the last week. Been seeing some large returns, large APRs there as well, especially for the looping market. Obviously, you have the concerns with gas fees since it's ETH mainnet, but I am specifically looking at the total locked value on the money market there, and that has also been growing very quickly over the last week, and I expect that will continue to grow, especially if they can capture even a fraction of existing money markets on ETH mainnet.
Agreed. And then really that's all that they need to do. Obviously, you have such huge institutional heavyweights, or rather existing heavyweights, the Aves, the makers, the Yearns that have been out there forever. So being able to tap into any of that will be huge for Radiant.
Oh, that reminds me. Is anyone excited about that new Yearn Vault?
Which one?
Didn't think so. That was a joke. I think I may be lagging, so I'm gonna stop talking.
I just found out about Notional earlier this morning, Dave. I don't have any specific thoughts on Notional Finance. If anybody follows Notional, they are now on Arbitrum. So is Maple, by the way. Maple is also on Arbitrum and Base as of this past week. So, yeah, I don't have any specific thoughts on Notional. If anybody has any thoughts on Notional, feel free to put it in the comments if you have a specific take. But something that'll be on my radar for sure. Speaking of limited time, one video I definitely think you guys should check out if you're on our YouTube channel is check out our interview with Declan Fox from Linea, the L2 ZK L2 Zero Knowledge L2 from Consensus, who brings you both Infura and MetaMask. They have the fortunate ability to put Linea on every single MetaMask installation when you first get there, so you will be seeing Linea quite a bit. They have a new Linea DeFi voyage. If you watch that video, you'll hear more about what that's about, which is about XP points, possibly towards a potential airdrop, which at this size could be pretty good. So ultimately, you'll be doing a whole bunch of different tasks, 6 weeks, 10 waves, 10 core tasks. So feel free to, again, check out the show notes for this, whether it be, on our YouTube or on our communities, whether it be in our mastermind or Beat the Banks. We'll have all that information out there for you. Jangle, you've had some extended talks with Linea since we had that interview. What do you think about what they're doing here?
Yeah, it's brought to you by Consensus. It's a ZK roll-up. They have just launched in like the last 48 hours their voyage, their DeFi voyage questing thing. So there are a few tasks. If we can maybe get those linked in chat, I put them in our Discord the other day. There's a few tasks you can do to basically engage with Linea, and I will put them in the YouTube chat. And if you go to those Twitter, man, those are 3 different links, and boy, does that look ugly. I'll do
the Linea blog post. That'll go out to everyone who's watching, whether it be on what platform. We'll start with that. You can get to all the links you need to from there.
And then there's that one as well for actually doing the voyage. It's cool. They haven't mentioned any airdrop to me, but you never know. So if you are in the business of exploring new L2s, they are a team that's really not going to be going anywhere. So definitely check that out.
I mean, I guess it's open to interpretation, but I feel like Mr. Fox was winking pretty hard.
Oh yeah, as he should. Anything to build hype around what's going on. Specifically, I mean, one thing that's great about Linea that's different than other L2s is that the same bytecode that you can use on any regular EVM can be ported to Linea very quickly because it has full compatibility with the EVM. So that's not something that every L2 can say. So I do think we'll see a little bit of an explosion, hopefully for them, in the next couple months. They have the positioning, they have the dApps, they have the ecosystem. It's all a matter of going out and just exploring. So go out and explore, see if Linea is the right spot for you and your allocations.
In relation to the ARB STIP, I just wanted to touch as well on GMX. Been keeping an eye on the yields there, and they've really been popping in chat if you want to bring it up. Specifically, even looking at BTC USD, ETH USD, we're looking at 17 to 26%, and then some of the lower cap coins have been going parabolic and hitting 60-70% and sustaining it for at least a couple of days now. Obviously, this will go down over time, but I think it's worth mentioning as it's one of the more Lindy protocols that you can get on Arbitrum.
Whoa, 50% on Link.
Yeah, wow. So you're pairing your Link with USDC, but yeah, 50% on the Link USDC pair. And if you got a decent time horizon, it's hard to go wrong on that one. I assume some of these will be absorbed, but also, I mean, man, the BTC USD pool at 26.5%. So, man, that's pretty insane. It's pretty insane.
That's good yields for BTC, yeah.
Agreed.
And I mean, 17% on ETH and USDC is nothing to sneeze at. And ARB USDC at 60%. That's pretty nuts considering ARB has had that staking proposal passed. So we're looking at ARB staking on the horizon, which might give a little pump to ARB. Like I'm kind of short term, pretty bullish. ARB obviously depends on what the orange coin and the rest of the market does, but I think once people wake up to the ARB staking that's going to come online in the next couple months, it could experience a little pop. So yeah, pairing your ARB with USDC, getting 60% on GMX, it's pretty cool. It's not a bad position. Probably just as high as yield is a decent range on V3 and way less risk of impermanent loss. So yeah. I wonder how, this is going to cause an inflow in liquidity to GMX V2 pools. And I wonder how that does on the whole adoption and use of GMX as a protocol. It's, really, I don't do a lot of trading. The only downside of GMX in my experience, my very limited experience trading on there, has been the, lack of pairs. They're slowly, improving that by adding pairs to the V2 pools. But since they're isolated pairs, each pool needs to get new liquidity. So, just they can't just add every single pair because they got to attract liquidity to the ones they have before they create new ones. So, this ought to help that and drive some more volume to GMX.
Are these updated every Wednesday, or is this
these are updated real time? I believe
in real time. Okay, that's what I just want to make sure because I think these are updated in real time, not every Wednesday like the V1 version, the ETF version of what this is. So, real quick jingle for ELI5 for anyone who's watching this and just has a quick question about GMX and why it's been the darling of DeFi for the past 18 months. This new V2 with the isolated lending pools, obviously, in either case, you are funding the trading services and you're being incentivized for doing so. Can you kind of do a quick run through as to why they've moved to an isolated lending pool model for GMV2 here?
Yeah, so like in GMX V1, you have to provide liquidity for all of the trading pairs. So since you're providing liquidity for all of them, they only stuck to majors like Bitcoin, ETH, a little bit of Link, and a little bit of Uniswap, and then stable coins. But with this, they obviously have a bunch of different pools. So let's say I want to get yield by making a market for perps for Bitcoin, but I don't want exposure to ETH. I don't want exposure to Sol. Then I can just enter the Bitcoin USD pair and I can provide liquidity for people trading perps and swapping between WBTC and USDC. And then same thing with any other pair. Like I know Doge is not like Wrap Doge doesn't exist on Arbitrum, but like people want to trade Doge and trade the perps on Doge. And so with that, you can see it's the assets in that pool are ETH and USDC. So it's just a synthetic perp market for Doge. But the actual collateral assets are ETH and USDC, but it's an isolated pair. So all the trader P&L, all the risk of that pair is isolated just to that pool. So if I don't want to have anything to do with the volatility and the potential trader P&L of Doge, then I can just stick to, ARB USDC and in the ARB pool. I can just stick to ETH. I can just stick to BTC, which is pretty exciting. So, you can't trade as much as you can on something like Bybit or, Binance or something like that, but it's getting there. Steve asked in chat what my favorite coins are outside of ETH. For me, it's a long-term play, as in like greater than 12 months, but like I'm still holding GMX. I've been talking about it since January of 2022. We're almost like 2 years later. And I am still holding GMX, right? Like I'm been accumulating it since the bear market. I've bought it at $50 before. I've bought it at $30 before. I've bought it at $20. I've bought it at 10. But I'm happy to accumulate GMX, and I'm not selling it for anything less than 3 digits. And I think that's gonna be on the horizon. I've been stacking multiplier points and earning yield on it like this whole time. So while on-chain perp volumes like are still relatively low because really volumes in general are low, they will be extremely high, especially when you consider the amount of KYC and restriction that's happening in the United States in order to get access to these financial products. We actually did see recently that Coinbase was allowed to launch crypto futures markets, and I actually just applied and got approved for that. So that's really cool, but they're not perps. And still it's just BTC and ETH. And I think that there's still going to be a lot of demand for US citizens to have access to, trading Doge, trading Sol, trading XRP, perps, and like all of those are there on chain with GMX. There's also synthetics. There's also Gains protocol. But just like in my experience, GMX has been a really strong user experience, both for liquidity providers and for traders. And like for that reason, it's one of my very few altcoin positions going into the bull market. I know that probably hearing me say GMX for 2 years is like pretty boring, but getting rich is sometimes boring. So I'd rather be bored and have like strong assets than like jumping from shiny thing to shiny thing, getting wrecked constantly. That's my 2 cents.
I like getting wrecked constantly, so I'm going to be jumping. I'm kidding.
Shout out to AVAX NFTs. Stings, don't it, Chris?
Stop. Don't get over that.
Better done.
I'll have everyone answer the question. Gabe, any other coins outside ETH that you're pretty bullish on based on the narrative out there?
I mean, Steve, in his comment there, he mentioned Link. I've been saying I've been buying some Link since the market lows here around 5.8. I think I bought. They are also working on new options for staking, and that paired with having the option to go into things like GMX and getting a yield pairing it with USDC, I think adds a lot of value to Link itself. I do think Chainlink, the protocol, is a core pillar of DeFi. GMX has a partnership with them now. They're only going to grow in the space and be more and more relevant. It's just a matter of if they can actually give some of that value to the token holders, or if they choose to put it all into the protocol. But even from a narrative perspective, I mean, in a bull market, narrative plays a much bigger part than any actual value. So I am holding my Link for now, and I'll continue DCA into it as the bull market progresses.
Hey, now you've got an opportunity to pair it with some USDC for like, we'll have some impermanent loss, but like not a ton, and you can get a 60% APR on it. Are you going to be interested in that, or you'd rather just not have any impermanent loss exposure because it could rip hard at any moment?
I will hold until I see what kind of V2 staking they're working on, but yeah, it's definitely interesting and definitely something I will be considering. Yeah.
Also important just to say, before Andrew gives his thoughts, we are not your financial advisors. We don't know anything about your personal financial situation. We are not legal advisors, tax advisors, financial advisors of any kind. We're just 4 dudes on the internet who are talking about the crypto space. So this is not financial advice.
Mr. Llama?
um, I think OP. I think right now, short to medium term, if you're looking for something away from majors, you're probably looking for a narrative play. And we've talked about this, I want to say, for months in our private mastermind. And I don't think that, my thoughts on OP have changed. I'd love to hear if Jangle has any like new thoughts, but I think, OP, as we get more retail engagement, we have base building on the base building on the OP stack, largest US exchange, one of the largest in the world. And there is potentially, even if there isn't like a direct, path of the immediate value accrual from users equals OP token goes up, I think that there will likely be increased speculation on the price of OP as the retail market heats up. Now, this is even more speculative, and I've been public about having a position in this in the past, and it being like my biggest single trading or holding and trading win of all time. And it's interesting to see it having a bit of a resurgence over the next 30 days, though I'm not sure if it makes sense to buy right now. But RSR, the reserve rights token, is up 57% on the 30-day. It's still down 50% on the year. But I have seen this thing absolutely rip in the past, and I know we typically say, it's last market's token. But I'm going to be doing a little bit of catching up on what the reserve team has actually been doing. They've got something pretty amazing in that they actually have a product that people use, and it's something that people use that aren't DeFi natives. It's something that people actually use in the real world. So I'll be keeping an eye on RSR. Don't currently have a significant investment in it. I kind of took my 25x and got out. But it always has a place in my heart, and I think it's a really cool project, and it could just go parabolic again. I don't think that's out of the question unless there's something I'm missing on the tokenomics. So OP and RSR are the tokens I'm keeping an eye on that haven't already been discussed.
Good point. Yeah, I'm still holding my OP ETH position, my LP position. I've been in, I don't know, 90-ish days. I think I'm up like 15, 18% when you account for yield and performance of those assets. The OP has been performing pretty correlated with ETH, and I'm getting most of the time around 80 to 120% APR on that position. So I'm cool holding it until maybe like a month before the EIP 4844 update on Ethereum goes live. That's been my plan. That's currently looking most likely to be around March. So yeah. So maybe I exit that position around February. That's like my tentative plans. If you're like new to Beacon and you're like, wait, how did I know, or how was I supposed to know Jangle was jumping in that position? I don't remember that. We covered it on our internal mastermind and our private calls and private Discord. And if you're interested in gaining access to that, you can go to beacondefi.xyz/apply.
So for me personally, everybody knows that my biggest bag is in Cosmos. So I will talk about
Sorry.
It's 50-50 Cosmos and ETH. So, I do like multiple opportunities.
Your biggest bag is for this next bull run is Cosmos, dude. I've got to fund it. I'll hold back. Go ahead. Make your case.
No, it's not the biggest bag. Like I said, I do have significant bags in Cosmos. Not Atom, by the way. I do have some.
Oh, I thought you meant Atom. Okay.
No, I meant.
I hope
Cosmos
it's
is
like
a
maybe
gigantic
Osmo.
IBC.
Maybe Osmo.
No. I mean, Osmo is kind of on the way back up, but for me, it's Kujira has. KUJI has just cool. I don't know what happened with I know what happened with KUJI, but the one thing that's good about KUJI, all the VC money is gone. no more unlocks. That's all been done. So now it's all about real yield. They have a full suite of apps that people are using now because they have their own onboarding wallet called Sonar. But Orca, if you used Orca back in the Terra Luna days, liquidation available to retail traders. This is their order book. Fin. They also have Bo, which is liquidity, much like GMX, for their order book decks, as well as a bunch of different things that are good for staking. I really love this ecosystem. I love what they're doing. They continue to build even in the face of down action, and it's been rewarded because they have. I mean, my goodness, they've. I mean, I was in on Kujira at 40 cents. So I mean, it's to me, this is obviously my bags are euphoric right now, but essentially the other one I'm going to talk about is Rune, which is Thorchain. Thorchain only has one app. It's ThorSwap. And they do have they have a couple of things they've built. Streaming swaps is probably the biggest thing that have, besides the new Saber vaults, single-sided Saber vaults that have been really good. They deal in native assets. So if you have native BTC, native ETH, native AVAX, native Atom, you can actually put them in vaults here. I have Atom chilling here at that's 20%, but it was 33% when I first got in. But essentially they have streaming swaps. So instead of doing a full swap of BTC, to another asset, they'll do them in chunks. And oftentimes it's more efficient and cheaper in fees. So that was something that was a cool narrative. We'll have, we've had Chad Barrowford, the main dev from Thorchain on. Hopefully we'll have him on again sometime soon for a call. But because they use native assets, I've always been a big fan. They were the first to really have a true cross-chain swap. Partnering with a bunch of different protocols. But yeah, those are my two. I mean, it's obviously huge in the EVM. Love EVM. But if there are two that I'm pulling for, that I have been for a long time, it'll be Rune and KUJI. So not Atom.
Andrew, did you give your picks?
Yeah, OP and RSR.
Oh, that's right. OP and RSR. Okay. We're kind of like over time. Do we have anything else we need to cover before we get out of here?
I mean, the only other thing that I have on the agenda is that Near and Polygon have partnered to bring a zero knowledge chain based on a prover, for WebAssembly for WASM blockchains. Partner that with them now providing a near data availability layer to kind of go against Celestia. Again, the lines are starting to blur, right? Because we talked about convergence between IBC, between EVM, a bunch of different chains to now come together to this, modular thing. Probably most users won't see this, right? Moving forward, I think that's the idea, is that you scale up through L2s and L3s and all these other data availability layers so that, in the future, most people won't care if it's on layer 1 Ethereum. It'll just be scalable through all of these other methods. So having Celestia, be in the race to be a modular third-party data availability layer. Same with Near DA. Again, cheaper to settle, cheaper to use on these blockchains. Help get more of that data available to help with liquidity. Put them all more in alignment with each other, I think, is the interesting part about this. Anybody have any thoughts on this before you go home?
Never sleep on Polygon.
Matic do Matic things, right?
My goodness.
I think it's cool though to have a WASM based ZK prover, because obviously everything with Linea and some of these others are built like ZK Syncera. They're built in Solidity. So yeah, I think this is very interesting to say the least. Actually, I can't say that it's built in Solidity, but having this available, again, more resources, more devs to come and build. These are the things that are going to bring more apps to all of this block space that's available. So I'm all for it.
Sir, wake me up when they launch at least 100 million incentive program for using their chain. Till then, I sleep.
On Near or just on Polygon?
Don't care. 100 million.
Yeah,
100 million or a walk.
Fair enough.
100 million incentive program for Ponzi yield farms, or I send it back.
twice.
150 million incentive program for Bonzi Yield Farms, or I send it back. Hey guys, if you enjoyed the stream, we got 14 people watching, only 9 likes. So hit the like button. We really appreciate you. Yeah, subscribe, hit the bell. We're here every Wednesday at 1 p.m. Eastern time. So come hang.
Love to see it. Love having you all here. And come see us every week. Follow us on socials. That way when we're going live. We're here every Wednesday, 1 p.m. Eastern.
I have a special prize for anyone who can figure out what my Twitter handle is and follow me. If you do find it, just at me and say I found it, and I'll slide into your DMs.
That is probably a pretty unconventional social media growth hack. Guess my social media handle. Haven't seen that one before. Have a feeling that might be a leaky funnel, Andrew.
Oh, that popped, Andrew. That was good. I like that. All right, guys. We'll see you next week. Have a great day.
All right. Like the stream, or I send it back.
Yeah, sure.
See you next week, guys. Have a good one.
07, everybody.